Hi, welcome to the Market Alert for Thursday, the 4th of September 2025. So jolted, obviously implying there about the jolts numbers yesterday. So they didn't come out very well. We'll have a look in a second. Bonds, gold and crypto saw after labour market meltdown. Luck may have run out for the labour market. Of course, we've got the ADP ones today. And then tomorrow we've got the non-farm payroll. Stocks mixed and bonds bid amid dovish data and Fed speak. So somebody's been out from the Fed again, obviously saying things that are conducive to a rate cut. Like I say, the question is, it's not whether there's going to be a rate cut, it's how much it's going to be. The wrap overbought gold, oversold Nvidia, two giants at extremes. Gold RSI at 77. Gold saw its largest single day inflow since March, with an increase of 1.5 billion in GLDs. Economic news. So let's just go back to yesterday, have a look at these jolts numbers, and you can see there, I mean, they're all obviously manipulated, we're aware of that, but sometimes it's just entertaining to have a look and see what it is they're actually doing. 7.63 was the previous, the forecast 7.38, and then it came in obviously a lot lower there at 7.18. Today's economic news, we've got the ADP today, which is the precursor to the non-farm payrolls. They're out at 1:15. ADP is an odd one, it comes out 15 minutes earlier than the standard economic news items. That's forecast, previous was 104.73, so again, all eyes on this one. Unemployment claims are also out, that's a weekly number, and then we've got ISM services PMI, which is an inflationary economic news item. Right, let's have a look at this mixed day for yesterday and kick off with the Dow. So yesterday was a lot quieter. We got an inside bar, meaning that the high and the lower inside of the previous day's market there, which obviously was Tuesday because we had the Labour celebrations on Monday, Labour Day celebrations. So an inside bar yesterday, fairly quiet, but the volume is an interesting one there, and we're still rolling over on the downside as far as momentum is concerned there. 30 minutes, the market managed to move up in the electronic session, but then when we got the the jolts numbers, the market had a different opinion and moved lower, including the cash market as well, which tried to rally, but then it was subjected to selling. However, later on, after the dovish comments from whoever spoke yesterday from the Fed, the market's moving higher, and overnight prices are above the close, and the DP at the moment just trading in a bit of a sideways range there. So it's quite stable overnight, and like I say, you can see that as well in the daily chart. We need to take out the 20 bar moving average if we are to move higher. And one thing we can do, as I've spoken of before, is to go to the recent high and to the recent low and put in these markers here and targets where the market could move higher. The key here, two things, obviously the non-farm payrolls tomorrow, the ADP today, and also how the market reacts with those interest rate cuts that are going to be coming. The key here is, like I say, the two targets are 78 and 89, and that's a good way of measuring the momentum to the upside. Just like we had the pullback here, loss of momentum, pullback, loss of momentum. There isn't much on the upside here at the moment to get excited about as things start to unfold on a global basis. Let's have a look at Europe and the German DAX. So yesterday, also an inside bar, it was an indication that things are quiet. We traded down to 89% retracement there. Let me just get rid of a few of these lines, and let's just add in some sort of a dead cat bounce scenario. So we've got this one here. In fact, this is the only one to draw off, and I'm just going to click twice on that. So we're looking at the chances of the market coming back off this bar up to the upside. We've got a 78 and 89 there as well, but also in between this we've got a 50% retracement with the 5 bar moving average. Meanwhile, in the 30-minute chart, we started to move up, we had a shakeout, and then we see the buying coming in the 30-minute, moving prices up till we had the selling coming in, and then we tried to hold the market at the 50 EMA. The market failed, and down we came until we get to another spike in the volume there to bring the market back, and then prices sideways. So we've got a bit of a gap there that's already been filled, as we can see there, down to the DP, and at the moment there's still some weakness around on the overnight as prices have just dropped out of bed. Let me show you this on a more intraday basis. You can just see there, this is a 1 minute chart, how prices were moving up nicely and then they just got clobbered, which is reflected there in this 30-minute bar. So back to the US, we've got the S&P there, also trying to make its way back. Let's just draw in some momentum indicator there. We've got 38%, 50% that we've got through, but we're stopped at 62, which also ties in with the 20 bar moving average. So the golden ratio in the 20, MA and the 5 actually are stopping the market from moving higher at the moment. If we look at the 30-minute chart, you'll see also that we're at the 200 MA and yesterday's high as well. So a bit of resistance around this area. Doesn't mean to say it can't move higher, but you can see why it's actually stopped there from the daily chart resistance, and then looking at it in more detail there. In the UK, well, despite Rayner's, what can we say, terminological inexactitudes, I think is what my late business partner used to call telling fibs. It doesn't seem to add up, does it? And I can't see, or I can't wait for the lawyers to come out and say we never gave her this advice. I think it's all smoke and mirrors. But anyway, you'll see there in the FT yesterday, the bit of a dead cat bounce going on. We've got the momentum marked up to the upside there. It's just a matter of whether the market will actually move or not. I also noted yesterday that the budget, the autumn statement, not so much budget, a statement has been put back to November the 26th. How convenient, 1 month before Christmas. So what are they conjuring up that they've had to delay it by a month? What are they hoping for? What are they hiding? It doesn't make any sense whatsoever. So all it's going to do is add to more uncertainty. And I suppose if she's going to increase taxes here, there and everywhere, then people will probably just go out and spend and have the best Christmas they can have, because thereafter it's going to be dire. That's for sure. 30-minute chart yesterday, market moving higher. Rayner then says, I should have resigned. Well, couldn't agree more. And then the market moving to the upside there on the overnight, back to yesterday's high in the 30-minute chart. It's just pure smoke and mirrors, this is, isn't it, to actually keep this market moving to the upside. But there you go. It's amazing what you can do when you've got the influence to do it. Notice in the daily chart, just going back to this, we do have some shorts covering there, and we've crossed over on the momentum as well, so we could see a bit of a dead cat bounce there as well. So the US dollar is stuck in a sideways channel. Not a lot to report here, because obviously it's waiting for the ADP today and the NFP numbers tomorrow, but more importantly the 17th of September, waiting for the rate cut, which is at the moment speculated at being 50 basis points. Let's have a look at the metals for yesterday. So starting off with silver, no surprise overnight that they've tried to hammer the price. So we had a big move to the upside yesterday. We are overbought. I wouldn't be at all surprised if we don't see a bit of a slowing down of this momentum. You can see yesterday, big move up and then back down with the jolts, and then back up again. But overnight, when it's quiet, if you want to slam the price of silver, do when it's quiet, and that's the overnight market. It'd be interesting to see what the actual contracts were for the COMEX on this, but we traded down to yesterday's low, and we've seen the contracts being picked up there and now trying to move back to the upside. Meanwhile, gold continues to move higher, but the same thing there. Yesterday we moved up, we created a new all-time high at 3578. Long way to go in this market and silver, but you can see overnight give it a monkey hammering again just to pick up some gold that's cheaper, down to yesterday's low. And it's nice to see that the lows from the previous day in both gold and silver now are being picked up, particularly in the overnight markets there. And let's have a look at the gold-silver ratio. I think I may have missed this yesterday. So in the gold-silver ratio, we had the gap, didn't we? That got filled, and now we're sideways and a bit of red coming there as well overnight. So it looks like silver may be playing a bit of a catch-up to the gold price from yesterday. Right, let's have a look at yesterday's market action in the DAX, and it's not pretty, so spoiler alert there, but let's have a look anyway. So in the DAX, the market selling off from the open, and then we had Lagarde speaking. The market then settled down and listened to what she had to say, words of wisdom from a criminal, and the market moving up. Well, what a surprise, because that's what central bankers are there for. Same as Powell hint that there's going to be a rate cut, and that keeps the market stable. We might as well sail all the way through this sideways move to the US. We then got the jolts, which will come up in just a second, because for some unknown reason, it didn't work properly there. You'll see it catch up though in a moment. There we go. So we had the jolts. It was a non-starter. Actually, that's not the jolts. The jolts was earlier at 1:30. So I can't remember what that one was. Let's just have a quick look. Yeah, that was monetary policy report hearings, and then actually jolts is at 3. Yes, it's not the ADP's 1:15, jolts is 3, and non-farm payrolls are 1:30. So yeah, there you go. So that was the jolts, and then the market moving up, of course, and then the reality kicking in that it wasn't as good as they hoped for. So market down. So this must be the Fed speak that was spoken of in the headlines, which I'd clearly forgotten about. So anyway, the market then trades sideways, and then we get into this horrible mess of a sideways move. Market filling on the upside and then putting in a sell, which is also taken out. Small losses there. Try to move the market higher, but there's one more loss to come yet as prices get to the close. We see the selling coming in there, and then the market reversing, but not for long, as it then reverses once more back to the upside. Not for long though. Again, some more big volume coming in as we head to 4:30, and then prices drifting sideways. So obviously a lot of traders exiting the market around the 4:30 official close there. So let's have a look, see where we are overnight. And as we saw earlier, the market having moved down back to the DP through the 200 in the 2-minute chart, and we got the close just below there. So at the moment, the optimism that was seen there soon got dampened when traders came in and placed some big orders just to move the market down and pick up some bargains. So there we go. That's a quick look. Well, not so quick, but a look at what's going on at the moment. So let's see what happens today with those ADP numbers at 1:15. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.